Okay, so this is the recap of the trade that I took. Um, we start trading from 8 to 12. What I look for is the first 15 minutes. We're on a 15-minute time frame. So what I do is I grab my line. I put the line from the top of the 15-minute candle, the first 15-minute candle, and I put a line to the bottom of the first 15-minute candle. So the top, bottom. So this is become my 15-minute high, my 15-minute low. All right. So after that, we have our different session highs and lows. So red is always London, blue is always Asia. So what we have here is our London low, our London high, our Asia low, and our Asia high. So this is different sessions, like I said. So this is Asia session, and this is London session. So Asia highs, Asia lows, London highs, London lows, right? So what we could do is for when we first come on the market, what we notice, let's pretend that these candles on here, what we notice from, so pretend like we only looking from this candle on back, because this is the only information that we have so far. So what we do is we only have we have a resistance level, right? Which is the Asia highs, because this is the highest point. No, we're pretending that this candle here, so no candle has came up to this area, because if we notice, it came up to this area and then just fell after that. So we could determine that this is a resistance level that price does not want to go above. Then we have accumulation, which is another words for consolidation. So we have the support, price doesn't want to go above, right? So it fell down after that. You have the support, not the support, resistance. Price doesn't want to go above, so it falls down after that, right? Then you have the accumulation, right? So right now we're using the support and resistance strategy. We have accumulation, manipulation, distribution. So what we have here is what price tends to do is accumulate to the side. It accumulates to the side. What this means is price doesn't know what it wants to do. So normally the first big move out of this is the manipulation, which is manipulating. So let's say we're just going to use buys as an example. So we have the accumulation, which is it going to the side, right? And then let's say price, the first big move is to the upside. It doesn't have to be to the upside, but we're using the upside as an example. So price goes up and it manipulates to the upside in this situation, because it wants people to think that price is gonna go up and get people to think that it's gonna get ready to want to buy. So what it do is manipulate to try to trick people into buying, and then it distributes to the downside. So distribution is just the real direction that price wants to go to. So you have right here, you have accumulation, which is consolidation. Price doesn't know what it wants to do. You have manipulation, which is trying to trick people into going up, which means buy. And then you have distribution, which is the actual direction of where the market actually wants to go, right? So keep that in mind. If you want, you could pause the movie and pause the video and draw that. Then you have the resistance, like I said. So if you look right here, you have accumulation, price is going to the side. Then you have the manipulation. You have the resistance level that's being respected, right? So that's two signs of bearish, because once it manipulates to the upside, it's going to distribute to the opposite side, which is the opposite side of up is down. And when you go down, you're selling, right? So once you get the strong bearish candle after that, we now go and try to get our equilibrium after that. So we have a hint that it's going to distribute, isn't confirmed that it's going to distribute to the downside. Why I say that? Because like I said, you have the 15-minute high. Price respects the 15-minute high, right? So what that means is, what could possibly happen right now is price could come down into the 15-minute high, respect it, and then go right back up after that. So that's why it's not confirmed that it's distributing yet. So we get the GAN box, since this is a bullish candle. So on your screen, this is going to be green. So the blue is a bullish candle going. So since it's bullish, we start from the bottom and go to the top, right? Boom. So not only do you have a respect of the 15-minute high, you have respect of the equilibrium, right? So like I said, price could come down, respect this area, and go back up after that. So that's why we don't, it's not confirmed that it's distributing yet. So then we now have a break of the 15-minute high and the equilibrium. So now I'm getting the hint that it's gonna start distributing to the downside. So now I'm my bias is selling, right? Because it's going down. You have the break of the equilibrium, which is this candle. You then have the retest of equilibrium, which is this candle. And not only did it, if you pay attention, not only did this candle retest equilibrium, this candle right here, not only did it retest equilibrium right here, but it broke through the 15-minute lows, right? So it retested, and it broke through the 15-minute lows, right? So after you got the break of the equilibrium, you got a break of the 15-minute low with a retest of the equilibrium, right? So like I said, we always need a retest to confirm. So let's say price, let's say this is an area that we need to retest, and let's say it breaks it, we need to retest like this. So just think about it like a support level. What price will do? Come down. Oh, actually, matter of fact, we could treat it as a resistance level. Price doesn't want to go above this, right? So we have a resistance level, right? Price comes up into it and fall down after that because price doesn't want to go above it. So just the same thing as this. This could be considered a resistance level. Price does not want to go above it. So what it does, it retests that area, realizes the price is too expensive up there, comes down, right? So we have the 15-minute low, which is the bottom of the first 15-minute candle. We have the break of it. We then have a retest of the 15-minute low. So it's showing me that, okay, it doesn't want to go above here either. So it is the retest of the 15-minute low. And then you have a close below. So since we're looking for sales, we want to close on the bottom wick of the the candle that broke the 15-minute low. So this is the candle that broke the 15-minute low. So these are the ones that's going to confirm that I want to sell. The break of the 15-minute low. And then you have the break of the bottom wick of the candle that broke the 15-minute low. So you have a break of that. So it then broke, this candle then broke the wick of this candle. And since we're looking for sales, we want to break to the bottom side, which was what we got right here. So what we did was we entered in on this candle, and we put our stop loss to this, the 15-minute low, which is this candle right here, and we took it for a 2-to-1, and we got the trade.